Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Joyce, managing director on Nasdaq's market intelligence desk, for an update on technical levels to watch in the Nasdaq 100 as August trade comes to a close. Brian, it's great to see you as always. Welcome back to Trade Talks. And before we get into technical levels, I want to get into some of the economic data that we've been processing over the past couple of weeks, certainly through August. What's your take on it here? It seems okay at best.
Well, we're seeing a softening in the economic data. So, the run up that we saw in May, June, July, we had, a very strong second quarter GDP print. The employment numbers have remained very solid. We've seen very good home builder sentiment data, improving consumer sentiment data as well, all throughout this year. And just very recently, in the last couple of weeks, we've seen, a slight reversal in that. So there was a revision to the GDP. This week's JOLTS jobs data for JOLTS showing job openings, had a very sharp decline. The PMIs have been weaker than expected, at least the most recent readings. And then we've actually seen, a little bit of a pullback in both consumer sentiment and the home builder sentiment as well. So, so we have definitely been seeing a softening in that data. A good index to look to is the Citigroup Economic Surprise Index, and that's what I'm just pulling up here right now. And you can see, this is back to the beginning of the second quarter of 22, a month or so after the Federal Reserve started its rate hike cycle. And you can see how there's a very dramatic decline, which reflects economic data coming in below expectations. And this is economic data kind of across the board. And we've really been seeing a recovery since then. Along the way, we've had a pullback in the fourth quarter from October through November. And then from March to early May, we had another pullback, but the longer term trend has been higher. So very recently, what we've seen is that at this recent high on August 17th, 2 weeks ago today, it was basically trading back, very close to the 52-week highs. And all of a sudden, it's now trending lower again. And that's, reflecting, those 3 or 4 areas that we were talking about: jobs, sentiment, PMIs, et cetera. So we've seen that pullback, and it's really coincided with the big swings that we've seen, or the pivots that we've seen, both in the equity market as well as in the rates market and the US dollar.
Well, Brian, I guess the question is, when does bad news actually become bad news for the market? It seems to have largely brushed a lot of this off. And to your point earlier, there are going to be concerns around the consumer at some point with student loan repayments. There's only about $100 billion or so left in COVID stimulus checks that have been saved. I'm surprised that they actually lasted this long. And then once you have to start living off of credit cards with interest rates at where they are, it's got to be a little bit challenging when you think about the discretionary space.
Agree. And I think we're clearly in right now, a bad news is good news environment where the softer economic data is translating into lower rates, which is now resulting in a very recent recovery in equities. Now, the pullback in equities hasn't been that dramatic. The S&P pulled back 5.5% from its recent highs. The Nasdaq 100 about 8.5%. And given the dramatic move we've seen so far year to date, those I would certainly classify those as healthy pullbacks and very modest pullbacks relative to the prior uptrend. So I think it's going to matter, the bad data, when we start seeing that impacting the credit in both the consumer and on the corporate side, and as a result, corporate earnings. Once we see, the data, getting further along in the cycle, particularly the credit cycle, and then that'll impact corporate earnings, I think that is when it's going to matter. And that's when you'll start seeing bad news, reflecting into bad price action in equities.
Well, let's take a look at the Nasdaq 100 here. Give us some fresh technical levels to watch.
Certainly. So, this is a daily period chart, and we're looking really at the lows from, January of this year. We during the pullback in March, when we had the bank crisis, we established a rising trend line, which really was validated at the recent August lows here. It coincided with a couple of pivots back in June, and that held support, and that marked the low of the most recent pullback, which was, we noted earlier, 8.5%. And we've now been rising higher. So, there was concern of a potential head and shoulders topping pattern here. And if you look at the symmetry of this candlestick right here, is actually last Thursday when NVIDIA had reported earnings, and its big weighting on the index. The candlestick pattern in the NDX is very similar to NVIDIA that day. But there was a lot of concerns here about potential bearish head and shoulders topping pattern, those patterns can also be continuation patterns. And as a result, what we're seeing since last Thursday and the strength of the last 5 trading sessions from Friday through today, that bearish pattern has been negated. And this now has been your continuation pattern. So, the next price levels to look at are, I would say from here, just the recent highs up around 16,000. And then if you want to look at the weekly period chart, so this is 16,000 right about here. This is the high during the week of July 21. If we can get above there, which is only a few percentage points higher from here, we could do that in 1 or 2 sessions without blinking an eye. About 6% higher we're talking about then the highs that were made in late 2021, which is, the all-time highs up around 16,575.
All right, Brian, I appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.